Good morning, traders. Welcome to the Traders Lab. I am your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profiles, a chassis in the intraday developing time frame. One moment, please. And in the meantime, can I get a screen and audio check? Okay, great. Well, thanks everybody. Thanks for visiting the Trader Lab. This stream's about integrating Bookmap order flow tools using the auction. And it's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars on the process you see here every day. The idea of this stream is to help you understand how the market works, why it does what it does, and how at times you get in alignment with it. It's also about helping developing traders understand what is the business of trading. It's about building a potential career in the business of trading, and the business of trading might be quite different than what we imagine it is, especially when we come into this business and we get a software toolbox. Then we think it's let's get into this toolbox and find love potion number 9. It really doesn't work that way, at least in my experience. And if you've been waking up, working hard, getting the same results, which means, of course, winners, losers, but you're still moving in the wrong direction overall, it might be because you do not have a statistical edge. But like everybody, including gamblers in the casinos, we all have winning trades and gamblers have winning hands. But in the end, it's really the net. So that's what the business is. It's not a video game. And if you're interested in the business of trading, you're all invited to the Bookmap Discord Trader Lab community. And if you're visiting on YouTube, there's a link down there in the bottom, and there's no cost. So let's get into today. We got a lot to talk about, of course. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room, but if we get into the live market, then we will just continue from there. Please grab a pen and paper, take a couple of notes. You're going to see a process that is repetitive. Now, what is about repetitive processes? It is that consistency must be anchored somewhere. Casinos, and that's really our business model, casinos only play games that have a statistical edge. Everything else is random. So if we can extrapolate or use that, if you will, as a business template or process template, then we need to build our structured trades out like the casinos build their games out. And that is anchored inputs. They play them exactly the same way. They don't change them. They don't make them up. They don't revenge deal. They don't do the things we typically do. They don't bail out of a game until it's over. Think about it. We are not doing the same things because we are humans and we are attached to the outcome of each interaction we have in the market with the other participants. The casinos are not. They just deal the cards so they can extract their edge. That's the business we are in. So maybe it makes sense to learn the business, and not only to learn the business in a higher conceptual basis, to create a practical application of a successful business model. And while that's no guarantee you will be successful, because you have to do the work and you have to deal with your emotional states, this is what the Trader Lab is all about. That's what it's built on, and you're all invited. Now, I have a couple little announcements to make, and then we'll get right on into today's market. So, by the way, just so you know, There's 60 PDFs that are available for everyone to download of these structured trades that I've referenced. These are not exhaustive. They are high-level overviews, but it'll give you a little sense of market mechanics. That's also available through the link in the bottom of YouTube if you don't have them. Now, let's try to do this without making big trouble. There you go. We have a regular weekly Zoom meeting for onboarding for Bookmap. And this is what it covers. There is no cost. It's only about a half hour long. And if you're new to Bookmap, or if you just want to see what does it take, to get Bookmap working, it's an onboarding webinar. It'll get you started all the way up from installation to putting your first trade on. You'll learn the basics of Bookmap, getting it set up, downloading, installing, and running it, connecting the data. What are the add-ons, resources, Q&A, and you can see there's one here, and you could just register at this. If Dan or Stephen, if you're here, if you can place that link in YouTube, that would be helpful for anyone who wants to learn more about Bookmap. You can register. It's a Zoom meeting. It's about a half hour. So I can't place it without making big trouble here. So if somebody can throw that, there you go. Thank you. All right, now here's, let's take a look at the higher time frame. Now, if you guys have been following the stream, I put some charts up to help you guys see what's going on. So let's go take a look. This is yesterday's chart. Now, if you remember, this is the tariff news, right? And we were long on this day, and this was our target. And you can see we basically hit that target on the button. And then we sold off. This is Friday. And as you remember in the stream, we always talk about the market goes up to go down, and the market goes down to go up. And the reason for this is it rotates on all fractals and time frames because there's stops inside the market and outside edges. So what did we have here? A S&P romp. Sell stops, sell stops, sell stops, sell stops, and then up here. Well, on this day, it was longs initially, and we opened up here, I think it was, and then that was our target. So the longs were over. Then we got sells up here, but they were not shorts at that time for me. They were long liquidation. So I got out, and this is all in the recent streams. You can all access that. I got out up here, and then at that point, it was just, are we going to continue higher or what? But once we started breaking structure, then we got short. And when I say we, in Trader Lab, it's all a matter of your individual trade plan. Some traders go to lunch. Other traders are trading all day. Some are trading, and it's all different processes in the sense the processes are generic, but the time frames are fractals or rotations individual traders trade is subject to their psychology. So we come down here, and this is the highest volume price from Friday. And we didn't take out this low. What does that do for us? We gap down here. This is the open on yesterday. And the first short was off of here, and the target was down there. You notice something repetitive. And this set up exit the shorts, and then it was longs. And then where are we trying to go? Back here, back to the retail price, and maybe higher. So what we ended up with is shorts in the morning, down to our target, exit, and then reversal, and then longs. And then the idea of the longs is to squeeze, to fill the gap and squeeze the shorts out. So remember, the market got short, the market was short, big gap, target, longs, then where? Here. Okay, that's our target. And I don't know if we got there yet. We're almost there. And the current market is around 66, 67. And this target is around 68. This is the auction. Now I'm going to take you one more. Watch this. Now remember, yesterday, this is the retail price from yesterday. Now when I say retail, I'm talking about shopping. But in the auction, It's about volume. So price, of course, we all look at price, but what differentiates price? It's the amount of volume that might take place at that price. This is the highest volume. What that means is yesterday, actually, yeah, yesterday, this was the highest price or retail, and buyers and sellers figured this is a fair price. But as the pricing is moving higher, then this is the last fair price. So where are we trying to go? Let's look. So this is too low. This is yesterday's retail price. And what do you see today? So, and this was done before where we are now. This is too low. So it's a long, and where's our target? Here. And to take the stops, any stops out, any shorts that are still in here, now we're going for this 60, 68, and it's not a trade recommendation, but it is on the price map. And that is our target. Now, if we get up into here, we can come back to 85. We can go to 109. There's other structure in here, but we can talk about that. So I hope you're getting something out of this. And this is auction market theory. This is kind of think of this like a chassis to overlay everything on. So now, if you have questions, please post them. I'll do my best. And let's get back to the RTH. Oh, by the way, this is the target I just showed you at 68. Okay, so this is the current high of the day. That's where we're going. We also have the ETH high. By the way, that is also a target. Over 90% probability. Past performance not indicative of future results. And there's more. Really? Yeah, there is. But in this limited time that I have to visit with you, I have to kind of keep it high level. But I'm going to show you structured trades. And these are available to all of you in the Bookmap Discord Trader Lab community. But the key to this is you have to reverse engineer them. Now, the Trader Lab is a community of like-minded traders who come together to leverage their collective experience. And what it's about is a team effort. And it doesn't matter how long you've been trading. Everybody has something to contribute. And not only that, it isn't just about the contributions. It's the support. So there's research going on in there. There's statistical probabilities being extracted. There's posting of trades. There's discussions of psychological impediments. Have you ever had a psychological impediment? Well, if you haven't, you'll find out what they are here in the trading business, because there's no place to hide from yourself here. You're going to find out about yourself things that you never had to identify before, because our fears are triggered in uncertainty. And the trading environment is not, it's like landing on a different planet. It's nothing that you're familiar with. And all you can do is fantasize about what it is, but you don't know what it is. So let's take a look what this is here. Let's take a look at the RTH Open. This is the overnight volume point of control. This is the retail price from the ETH. This is like we're willing to do business. Yesterday's naked volume point of control, which means it wasn't tested, it is the highest volume price from yesterday. And I showed you these at the top of the stream. Now let's look a little further here. Let's see if we can find some other stuff. 5985 is an important location, and it is on the price map. I'm not going to go back and show it to you, but this is a support level, 85. So I have this on my price map. I have this on my price map, the highest price, retail price from yesterday. This is the highest retail price from another area, but everything means something here. So we have this, but this was tested in the ETH. If on the RTH Open, if I don't get here, it sets up going to there, which is aligned with that. And also we have a high probability of statistic of taking out yesterday's high and more. So let's now, is everybody tracking? So before the market opens, this is what we know. Are you guys with me? Very important. How we doing in YouTube? Are you guys tracking? By the way, please give a like. Uh, this is for you. This stream is specifically for developing traders, and we're all developing, by the way. So, the idea of being a developing trader is that's me too. And it doesn't matter I'm doing this 45 years or my experience. I am a developing trader. It's because ego is a problem, and it doesn't matter. There's an old saying in this business, you're only as good as your last trade. So if your ego starts running away, that's a problem, because humility is very important here. Ego creates expectations. And then this thing about right or wrong comes into the mix. There is no right or wrong in the outcome. The right or wrong is in following a structured, vetted trade plan where you have a statistical edge. It's not a video game. Of course, you can do that. That's your business, but you won't be in business if you do that. If you learn to understand how the market works, why it does what it does, and how you might get in alignment with it, just like the games the casinos play, and you emulate a successful business process, and I think we have to admit they do pretty good. They pay the gamblers. They give you the cocktails, maybe comp your room, fly you in, tickets to see Adele, ticket to the buffet, and they do really well. And so if we understand how that business works, we can model our business after a successful business. So we're not reinventing the wheel. We're just modifying what we do to what is already successful. I hope that makes sense. This is kind of where the Trader Lab's coming from. So let's go take a look. RTH Open, we have our retail price from yesterday, targets above, and the market is short from the tariff sell-off. So we're in the squeeze area. If you're short, you can expect some potential abuse. The thing we have to figure out is how to get long. This is part of the joy. So, and the nature of this business is randomness. So we can't predict anything. So if you're listening to this stream, it's not about being right. It's about identifying the conditions that the market is in. And right now the context is suggesting higher based on what happened yesterday. So we anticipate more buying, more short squeezing, and the rest of it. So for me, it's longs only, unless I have a counter trend trade plan, and then I can take shorts too. But let's just take this from one side. RTH Open, I get a sell sweep. I get a buy sweep, I get a sell sweep. It's the open, who knows? This is called VPOC migration, what it is, and I made these terms up. And I had to make the names up. They didn't exist when I started doing this. Who knows what they're called today? I just kind of stick with what I know, and it's what I've been doing for many, many years. So like you, I went through everything with indicators and trying to figure, getting everything to work and fit. And I always had winning trades and strings of winners. And I always get that excitement that I finally got it. And, I could just go and be profitable. And what I noticed was everything would break down. And I'm not going to spend much time talking about it, except I tried to solve it with trading systems. So I took indicators, really, and, like you, mix, match, add more, less. Thought more would be better because it would create more, quote, certainty, more confirmation. Does this sound familiar? And then time frames to kind of fit it all together. So I was pretty excited about that. And after a number of years went by doing that, and then again, like I say, with systems, and I got very enamored with oscillators because I work with George Lane, and he created stochastics. So I was actually in the same office with him. So I thought oscillators were the holy grail. And by the way, when all this is going on, technical indicators were in their infancy. So this was all new stuff. Don't forget, 45 years. So when you have new things happening, you kind of think, it's very innovative. It's very different. Prior to that, it was mostly fundamental analysis because we didn't have technical analysis per se. We had classical bar charting. So all this was new when I was first getting involved in it. So I really had no clue what the reality of this information was and what the defects were. I just saw a line crossover, and then you'd see the reversal and a trend, and that was all fine, you know. And when you're trading, position trading, you know, you can kind of use some of those things maybe a little bit better, but it's all fractal. So I'm not going to spend any more time on it, but I'm just going to say is, didn't work. And many retail traders, I would say most, when they come into business, go down the same path. And many run out of dollars and time before they ever figure out that maybe they're using a process that does not have an edge, but it does have random outcomes like everything does. And if you threw a dart at the wall or used the magic 8-ball, which we had on the trading desk, you'd still have winning trades. That ought to be something that you internalize that last statement. So let's go take a look here. Now, where's the low of the day? Wouldn't you like to know? Me too. So I'm coming down. Now, from right here, I see liquidity resting in the book. This is now I'm going to get down into order flow, and I'm using the auction or the profile, the developing profile, and these levels. I'm using them, but I have to integrate order flow because this is the tip of the spear. And I did a primer webinar. It's got about 31,000 views. It's available to all of you in the Bookmap Discord Trader Lab community. And it shows this process. So I don't use time frames. I use something called fractals in the developing time frame, as you think of it, because I'm not waiting on time. I'm waiting on structure. This is what order flow is about. So when the market, now this is my liquidity. You see it resting in the book. It's material. Now there's something else here. Let me see if I can get into this. So there's 170 contracts sitting in a limit order book right there. Okay. 65, 50, there's not much around it, but this is hanging out. And what the heat map is doing, it's showing me where the concentration of limit orders are. So what are limit orders? They're passive. I'm not in a hurry. I'm waiting here. Hey, I'll buy it if you bring it over here. Otherwise, forget it. I'll see you later. Okay. Now, just because this is sitting in the book doesn't mean it's ever going to trade. We may never get there. We have no idea. Remember, random. So let's look. Right here, I see a buy trigger. Now, I have choices here. And let's go a little further. Right here at 8:30 Central Time, RTH open is the opening swing high. I'm going to mark it. So, and I posted in Trader Lab this morning, and I'm pretty active in there when I can. I also am a full-time trader, so get kind of busy, especially around the open. But before the open, I talked about something pretty important. We are opening here at a fair price, and this is the ETH fair price. So this is really, if it's fair, we can go both sides. So we anticipate the possibility. Remember, there is nothing cast in stone with this, of two-sided trade or what's called an open auction. I know the following. If I get sellers here and I want to get long, I only want longs, and I know I got buy stops here. If I got any shorts, who knows? And I also know I'm looking for the long. Okay, so that's what I have. And because I'm opening in a fair price, it can slosh back and forth. And then we want to see who takes control. So I'm looking for longs, but I don't know from where, okay? That's what I know. So let's watch. This is a buy sweep. Buy sweeps, I have found often, and nothing is mechanical. It's all maybe. By the way, I'm going to draw a little line here, which I like to do so you can see levels. You notice I put this level on the chart. What is it? It is aligned with this retail price, and when the market opened, this was a retail price, and we fell away from it. Think of this like going to the store, And there's one here too, okay? I'm going to actually mark that one. Now, all of this takes a couple of seconds. So this is very fast. Now, I'm marking them for you. I don't have time to mark them. I just know where they are because I see them, just like you would, okay? But we're going to mark these because what do they mean? Let's talk language. Now, I understand indicators, you do too, but what is an indicator? It's just a translator of price and some derivative of something, right? So I'm using volume and price. So I've added one more element to it. What does it mean? When you go to the store, if the price is too high and you're a shopper, and basically trading is shopping, in my opinion, we are looking for the price that might be too low, and we're looking for the price that might be fair, and we're going to try to find a price that's too high. And this is happening in all fractals or time frames. This is the fair price. In the microstructure, this is a fair price. But then in the micro, if I move away from it, then it's temporarily, potentially too high. Now, watch, this variable high volume node starts shifting down. It's now resistance. That's too high. I shift lower. I get my buy sweep. I come to the mid and the VWAP. And where do I come? I come here and I come here. My retail price now is here in the developing time frame. Now I'm in multiple time frames as you think about it. I call them fractals. What did I test over here? Variable high volume node. Now it shifts down, which means, let's look in the micro, too high, and the opening swing high. So watch. So where's my resistance? It's here, and I have stops sitting here. Let's not forget the opening swing high. There. Resistance. Now, I don't know. When I see this, this could be the low of the day, right? And if I got long here, and the entry would be here, I'm just going to show you what would happen. If I got long, and this is a trigger in the Trader Lab, the entry is here or there, and I see this sweep, I have to scale ahead of resistance, which is here and there. And then if I don't get through resistance, I counter rotate. My support is sitting here. Let's just look at it. Trigger, test, resistance, stops. Let's watch. I come down, watch. The liquidity is here. They pull. So this is fake. This is the thing about liquidity. You don't know the intent until we get there. So if this stayed here and the sellers came in here, we might have icebergs on the other side buying. But what do we get instead? Sell stops coming out. This is the stop and iceberg detector. So right here, again, no clue. Don't you wish? So let's watch. Now, I'm only in 2 minutes. Something seems a little out of whack here. Hold on. Oh, I know what it is, guys. Sorry. Yeah, I have a little. Hold on. All right, I'm going to leave this for a moment. I've had a little technical thing going on here. I don't know. Pushed the wrong button on one of my charts, and I was messing with it this morning, and I'm going to have to do a little work on this. I got some weird things happening. So out here, no clue. Buyers take over. Now, where's my resistance, support, I should say? This says counter rotation down. To where? No clue. I get a trigger here. No clue. What is this? Wasn't that support over here? If I come back above it, might have become support again. VPOC migration. Now we're just following a process here. Now, I'm not one who's very good at picking the high or low anything. So I tend to be pretty cautious, especially with this type of open where I'm looking for two-sided trade. So here, this moves down. This is suggesting this is too high, this is too high, this is too high. So I know I have to get over this and find too low. I'm looking for too low. This now, when I break here and I take out the opening swing high, I have found too low, which is here. So now let's watch. I need to get long now. So where am I going to get long? I'm looking for a pullback, and now I have the opening swing high, I have the overnight VPOC, and I have mid VWAP, and this is too low. Let's look at the first long. Now, VPOC migration. This is a Trader Lab structured location. It's right here. When this moves up, it is saying this is too low, and these other levels down here might be too low. This is, and I have, remember, I want to get long. Now, I don't know about the low, not my thing. Break high, take out these guys, remember? Now, pull back and looking to get long. Where might that be? Opening swing high, variable high volume node. All of these are viable, mid VWAP. So you have a long here, stop has to be under here. You have a long here, stop under there. You have a long here, stop under here. So this is pretty much where you're at. So it's a long. Let's see how it behaves. Where do we come back? Here, here, here. All of these are longs in the Trader Lab. And the goal when you take a trade, like any trade, is to get risk neutral. So that requires a minimum two-lock configuration. What's the purpose of this? The job of the first contract is to buy the stop on the runner. And then you manage the runner or trade specifically to a target, and you have to vet that for yourself. So right here, so let's look at this. Right here, I see a sell sweep, says going higher. I get a buy sweep, says going lower. When I say it says that, it's maybe. It might go lower. I come down here. I come to my location. This is a long. All these are longs in Trader Lab, and I get a buy sweep. Doesn't that suggest it's going to go lower? What does it do? It goes higher. Notice here, the buy sweep went lower. Buy sweep, and I'm thinking this, it does that. That's nice. What else do we have here? Liquidity in the book. You'll notice the sweep into the liquidity. You'll see the stops, and they're selling icebergs now. This one stayed in the book, whereas the one I showed you below did not. Notice the behavior. There's the reaction. Now, coming down, all I'm doing is coming under some here, taking some stops, 84, and then I get my buyer again. So if resistance now is sitting right there. Why? I had my sellers, and they absorbed the buyers. That's what the sweep is about. I come back to where the selling was. Now, there's a couple possibilities. I know you'll like this. It can go up or down. But what do I know? I know that the sellers are active here. So if I come back up here, I need to see, is this now resistance? So if it is, let's look over here now. Let's come over here. And this is how I use order flow. So I know the sellers are here. This is microstructure. This is a triggering structure in the Trader Lab. Now, when I say trigger, what are you going to do with that? If I know I want to be long, I have targets above at, I think it's 68 or wherever it is. Somewhere up around there, which is my target. I have the ETH high. What am I going to do when I see a sell? Well, here's the choices. Once I see the sell, I can use it for trade management. I can exit my position. I can use it and do nothing with it. or because I'm managing out here because I'm trading into a higher time frame. But what you need to understand about this is it's a structure, it's a language, and it speaks to us. There's the high volume. This is the retail price. It's the same as all of these, except it's more micro. I'm using a generic process. When the buyers are here, there, the sellers are up here. How do I know that? Because this buyer is here, the liquidity was there, and this seller is below the buyer. If these buyers down here cannot consume the sellers and come up and come out, then it might be a reversal. There's the trigger because I broke below the buyers. I am below these buyers, and now my sellers are below. Now this is resistance. That is resistance. The buyers take a shot on gold. This is my resistance. This is my resistance. My sellers are above the buyers. Sellers are above the buyers. Sellers are above the buyers. If this guy doesn't get any traction, hasta la vista, thanks for playing, and he gets the coupon to the buffet, and that sets up a short. So now, when I say it sets up a short, it sets up a reversal. It doesn't necessarily set up a short if you want to be long. So it might be nothing or it might be something. It's subject to your trade plan. So let's watch. Where does it come? VWAP in mid. Do we want to be long? Perhaps. Where's our resistance? Here and here. Let's see what happens. Notice the behavior. This is how the auction works. Now, the fact that it's doing this is nice to know. The other part of it is, what are you going to do about it if you know it? Now, you don't know what will happen. Part of the joy of being in a 100% random environment. I mean, the market just could blow through here and take any stops out or sitting above here, right? Yes. So if I know this is resistance, if I got long here, let me give you a hint on how you might use this. If that is too high, and this is too high because my sellers are here, if I take a long out in here, I'm going to scale here and get risk neutral, and I have enough range. Then I'm going to manage the trade, and that means leave my stop down here, and maybe, if that's my plan, and it has an edge, because then the market has to come all the way down and take these stops out for the longs in this leg. Are you guys tracking? Now, what happened over here? What was under here? Stops. Whenever you're locating your stop, you got to look left. When I put my stop somewhere, I'm not putting my stop with everybody else because this is easy pickings. I mean, what happened here? What happened to these guys? Those 86 stops, where do you think they came from? Right there. Look left. Write that down. Look left. And why does this become easy pickings? Because retail trader behavior, they all do the same thing. They don't want to give it back. They're all worried about that P&L. Well, I got to tell you, there's more to it than the P&L. The P&L is the result of having an edge. It is not the result of trying to minimize what you give back, because everybody's doing the same thing. And when you do the same thing everybody else does, don't expect a different outcome. Unless, of course, it's the same thing that other traders do that have an edge. Then fine. Resistance. Resistance. You see where it came from. Okay? So now, what does that do for us? Well, I know I got resistance. If I get long, I got to scale, and I would scale here. You can scale there, but, me, I like to kind of, get what I need and maybe get out of Dodge. Resistance. Resistance. Look at the behavior. What is this? It is, and I'm going to get out of this microstructure, but I'm trying to show you multiple time frames or fractals as you think about them. So now we have the high volume sitting at this node right over here. So this is high volume is here, too high, right? This is the consolidation we broke away from. That's a sell. This sets up the long. This is resistance. It sets up a sell. You see how I can read this? Now, if I can read it, I can determine where to do something. Where's the volume down here? It's right here. Let's mark it. All I'm doing is identifying the auction. These sellers were absorbed. I have a buyer here. I come back. The volume is here. Why do we go higher? Because these guys are being absorbed by the buyers. I come back here. Now, this is where my volume is. Now, if it runs away from me, but look over here, the volume's here. Look where I go. Now the volume's here. Let's see what happens over here. Look, look, look. Support. VWAP, etc. And where's resistance? Here. Let's just watch the behavior. See what happens. Notice. And where are we trying to go? We got a scale here. So anytime we're taking these longs, and there's the scale there or there, doesn't matter. You're getting long here. You're getting long against this volume right here. You break high. If you pull back to this, you can take a long against this. It's all the same. The volume is in here, right here. So I can look at this, and so can you once you understand what's going on. This is too low. So I got my sellers here. I got my buyers here. I got my volume here. I trigger. I pull back here. I hit resistance, and where's support? It's sitting right in here, the volume. So that's a long trigger. This is a long trigger. All these are Trader Lab structured trades. There's your resistance. So now you know where to scale. You know where to enter, and you take the risk like the rest of us do. And it either, works, doesn't work, whatever it does, it does. Okay, now let's look at some probabilities. I'm going to try to run through this, and then I'm going to try to get to real time, and then we can navigate. So how do you manage your trade here? Well, a couple ideas, and you have to vet everything for yourself. See, this is very much time frame, as you think of them, dependent. So there's some traders in Trader Lab who are going to put this trade on, and they're going to get in the Barca Lounger and hang out because they're going for yesterday's high, which has a high probability statistic, and here, and the ETH high. That's what they're going for. Okay? Those are the possible targets. So let's go from here. So trade management. So you get your breakout. Now I'm going to go down in the microstructure. I'm just going to show you an idea, and you have to vet this for yourself. And this is not necessarily a good idea. It's just an idea. What makes it a good idea is if it works for you. Then it's a good idea. But it's something you can think about. So the buyers are here. Now, I've got to show you something else. So I don't know when we rotate. I have no idea. Okay, so I have no idea, except right here I have an idea. I'm going to show you what this is called. This is an outside edge of something called a distribution. And what this means is that the market rotated and it found too low. In other words, think of this kind of like a sale. Oh, that's too low. This is retail. And where's too high? So the market rotates. And this is called the distribution. So the idea is if we pull outside, then we set up a context in a context. Now, what's context? The trend's up, maybe. So if we think the market's going up, then maybe we want to take longs. But then how do you get long if the market goes from directional to rotational? That's actually a trade plan inside a plan. And you could learn this in Trader Lab. If we come outside, this is the mean. So mean reversion is outside in trading. So once it changes from a bullet to a rotation, then we know in Trader Lab to let it, once it rotates, then we're going to look for continuation longs. Unless, of course, you're a counter trend trader, and that's kind of a different conversation, and you can be. But you might find that as a developing trader, you want to leave that kind of thing to somebody else. So we get our buyers. I have a low volume here on this top edge, and I'm leaving this distribution behind, but I don't want to forget where it is. So I'm just marking these so we don't forget this is important, because what the market is, now this is language, what the market is saying, and I don't use indicators, so I had to learn to speak market. Basically, this is just the language of the market. It's not anything more than that. Your indicators, a Google Translate, that's all fine, except the indicator doesn't understand context or participant behavior, has no clue about all those other elements that you need to understand as a trader. So part of understanding the language of the market is to anticipate potential behavior, also recognize it, because in your mind, nothing can compute as quick as your brain can. So when I'm using order flow, I'm not dependent on lagging conflicting indicators. I'm able to look at this and interpret what it is. Right here is micro high volume. Notice the little volume, the breakaway, and I have right here a consolidation. It's too high. Micro. So let's think about what we got. So high volume is here, outside edge is here, outside edge is there. So I have the possibilities of the following. I can come here, and if it's too low, I'll go higher. If I come out here, and if it's too low, I'll come back here and then maybe go higher. And my targets are above. Let's see what it does. We did not get back there. That's fine. Doesn't have to. Watch. Now, what happened here? Resistance was here. We break high, we pull back. Resistance becomes support or nothing. So going higher, going higher, going higher, going higher. Here, selling trigger, break low, resistance. Let's mark it. We're just going to put a line here. Let me move this over so I have it accurate. This is the chart volume profile. It's only showing me what's on the chart, so I can isolate this so I can see where the volume is in this structure. And it's here. And these are not actionable. This is just, gee, that's nice to know. And it's there. So here and here. So I'm coming up. My sellers are here. My buyers are here. The sellers are absorbed. The buyers are still in control. Buyers are in control. Buyers are here. Sellers are here. Now, right here, I don't know. I see the seller. Now, right here, I know I got my buyer here. I got my seller here. And that means I got sellers here. Nice to know. My seller is now below my buyers in this buyer. This is a sell trigger. Now, what am I going to do about this is the question. Well, I have choices. Right here, I can do nothing, and my stop is way out here someplace. Or this says there's going to be a potential counter rotation. Now, the word potential is very important because I have no idea. This, I have no idea what happened here. There's a sweep on both sides. I think that's a big iceberg is what it is. 500 change. Yeah. 500 icebergs go off. This sets up, so the buy sweep into the iceberg, they slam it. You get the sell sweep coming the other way. And where are we here? Let's come back. We have an outside edge down here. Low volume area. It's out here. Let's just watch. Now, 9:30, we get something called the IB high. The IB has a high probability statistic of getting taken out somewhere along the line in the RTH. That's over 90% probability. Past performance not indicative of results. So if you're sitting long, you could just be hanging out and do nothing and be very far away from this and just let it work towards targets. Yesterday's high and that naked volume point of control at 68. So you're going for this and you're going for this at 9:30. Let's watch. Now we get VPOC migration. This is important. This says the highest volume is here, that potentially we're going to go higher. And we are looking for this statistic to get taken out and to get here. And 68, which is up above. That's the way we're playing this. Now, watch. Where's our outside edge? Isn't it here? Low volume node. Let's just mark this. Now, I don't know where it's, how far or how deep. There's no way to know this. So here, I come up, market's going higher, everything's looking good. It's groovy, as we used to say in the old days. And there's your retail price. Support, resistance, break low. I need to get over this to go higher. Micro high volume structure, the little consolidation. This is my current retail price for the whole day. This is the highest volume. I am trading in fractals, multiple time frames. So what I need here for this to continue higher is to do this. So let's see what it does. VPOC migration, I need it to push off, or if it breaks low and I can't regain, then I'm going to come out to the opposite side somewhere. Let's see what it does. Notice where it is. Comes out here. There's no precision. Now let's use order flow. I get a sell sweep. What do we know about sweeps? Well, potentially, and I'm out at a location. There's no precision in this. Remember that. I see a sweep that suggests up. So right here is a trigger. If I get long, this is my scale, and then we're looking for out the top. So if you took a long here, this is a Trader Lab structured trade. It's called mean reversion, and yeah, it's mean, because what's mean about mean reversion is where's the outside edge. This is the part that's very difficult for this type of trade, because what you're trying to find is where are the buyers going to be activated so we can return to the mean. It's called mean reversion, underlining mean, because I find for me, I can't tell where the actual outside edge is. So if I get a trade like this, I put the trade on and it might only give me a little whimper and then stop me out. And then I'm going to be looking for another area for the same trade. It's just part of trading. It happens. There's no perfection. If you're looking for precision, this is not a precise business. There's a lot of slop because of momentum and other elements. So here I get this. I have my micro high volume is here, right there on the bottom side. What happened here? They were absorbed. So, and there's my buyer above my seller. Now here, let's look at this. Buyers, buyers, buyers. Sellers are on top. The buyer can't take the seller, then no bueno. Seller below the buyer, continuing lower. Sellers here, sellers there, sellers in control. Going to zero, right? Here, buyer is above the seller. Warning Will Robinson moment for the short, which I wouldn't be on. Now I have a sweep, which is another situation that suggests upside rotation potential. Micro high volume is here. The buyers are above the seller here. Absorption. Break high. Now I know this, and here's how I think of this, and it's just a thought process. Why did this go up from here? Because there's passive buyers here. So if the buyers are here, I know if I get long that I need to put a stop under here, not here, under here, because if I come back, the buyers that were here potentially will activate again, and that'll support my trade. But I'm not going to put my stop here because we could come down here, pick the stops, and then reverse when these buyers, passive buyers, activate again. I hope that makes sense. So this is a long here to here, and now risk neutral. So let's watch this trade. And we have a high probability, remember? So we're looking for this. So there's your statistic, over 90% probability. So it would be from here to there to there, and then either you scaled subject to your plan, or you're flat subject to your plan, and we're going for this. Okay. Now, up here, high volume structure, it's right there. You can see it. Now, since we operate in an environment of complete randomness, we don't know when you see a selling structure if it's just going to be a little rotation or it's going to be something more meaningful. Don't you wish you would know? I have to tell you, me too. I don't know. But what do I know? I know down here, this is too low. I know this is too high. And I can get rid of some of this other stuff in here. We'll try to remove some of that so we can kind of keep ourselves centered, if you know what I mean. So support, I'm going to get rid of this so we can concentrate. So here I have my support here. I have microstructure here. This is a trigger right there. Now, it's not necessarily anything you should activate on. My resistance is there, and now it's here. Watch the high volume. What I'm doing, and there's other elements, of course, is I'm actually, sellers are here, buyers are here. Buyers now are above these sellers. It looks like the buyers are here. You see, they were absorbed. These guys are here. Are we going higher? Well, I break lower. This now is resistance. I break lower. Resistance. Where's support? It's down here. So let's see what happens. Now it's down here. Do I know what's going to happen here? Nope. But I'll tell you what I do know. If I get long here, my stop's got to be under here or even down here. And then I know this is resistance. So I might scale here, subject to my plan. I take a stop down here. And where am I coming? Out here. Now I'd scale and then take a stop. Okay, scratch. If you're operating that way, doesn't mean you should, just means you could, because it's all trades plan specific. And just like you, I take stops too. It's just, that's the business we're in. Everybody takes stops, overhead and cost of production. Casinos pay the gamblers, so I guess that's okay, huh? Sellers are here, going to zero. No clue. Outside edge. Remember how I explained this at the top of the stream? The market can get rotational, so it's mean reversion. And we do stress the term mean because where's this outside edge? Wasn't it there? Well, no. So I don't know. But what happens here? Sellers are here, going to zero. This is too high. Sellers are there. Sellers are here. Buyers are here. Buyers break above the sellers here, and they're above these sellers. When I pull back, I get my sellers. I'm pulling back to a location. I've got my outside edge. This is a potential long or nothing. We're going for this. I always give it a couple ticks. So this is our next target, and then we have 68 above, which is this. And we didn't get to it, okay? We did not get to 68. So if you're managing your trade, your volume is here. This is going to the moon at some point, and we're going for this. This is a very good level. And we got the high of the day is here. So this is our target. We still have open targets, ETH high or low, and this. So these are still on the hit parade, potentially for today. And who knows? So let's look. Now this all falls apart here. Let me take you back and show you something else. Now I'm gonna jump to real time. I wanted to show you the structure. So the volume is here. Buyers, 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 liquidity, liquidity, buyers going to target. The sellers take control here. Where's the volume in here? You can see it, the little node sticking out there. So this is too high. I break away. So I know resistance is sitting right there. And that is also a low volume node. So let's see what we do. We test. And this now is support. So subject to how you think of this, resistance is here. And then this chop, 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 chop with the break high is support. So if you slice this up, you can actually, so break high, test, resistance, and then you're looking for this, And then if you fail this thing, then you might want to be out of the trade. So where are we here? I just want to see the structure, and then we can talk about, is this news related at all? Trader Lab, was there any kind of news here on this, or is this just a walk in the park? Oh, okay, great. Thanks. How are we doing in YouTube? Now I'm going to jump to real time, and these are not trade recommendations. That looks, I know we had Fed speakers, so there's nothing. Yeah, that's kind of a interesting change. This is the thing about trading, guys. It is a random, because here's the deal. You're looking to predict, not the right business for prediction. LVN, outside edge, microstructure is right here into liquidity. Let's see what it does. Outside edge is up here, so we can rotate out to this area, probably up in here. Now, this is just rotational trading. It's not anything I would do. I'm just showing you structure. Micro high volume is here, there. Sellers are in control. Buyers are here. Counter rotation back to here. So let's watch what it does. Any questions? Please post them. Okay, I don't have anything going on here. I can read it, but I personally, and I don't give recommendations, I have no trades here. The only trade we might have is out here to come back to here. It's called VWAP to VPOC. It is a structured trade in Trader Lab, but we don't have to get the VWAP. We can set up right here at mid. So it's kind of a funky area. So let's go look out here. We have too low over here. We have too high over here. This is the auction or distribution we're operating in. We have rejected all of this up here, too high, too high. And the way I kind of do this, you notice me marking these high volumes. I mark them because it's a shopping experience. If this is retail and the volume dries up because we have less buyers up here, and then we had demand under here, and then we fall away from it. It's saying at the moment it's too high. And then we can go from here. In fact, hold on 1 second. I gotta try to turn something on. Help us out a little bit. And you guys have questions, let me come up and take a look, see what's going on. And if you're visiting in YouTube, thanks for stopping by. Please give a like. Oh boy, you're asking me the tool for the bigger picture. I use Investor RT. It's I believe it's maybe one of the best volume profile software packages out there. And of course, it does everything but wash your car. Also, what's pretty neat about it for me is it exports all these levels, so I don't have to do any of this manually. So there's your buy trigger and a sweep. See the sweep? Now, it's not, whether or not you want to take this trade, it's up to you. There was the mid. We have another trade in Trader Lab called VWAP to VPOC. So it didn't get to the VWAP. I'm hoping, you know what? I think I got a bad level here. I have no idea where this came from. Had some strange things happening this morning. So, okay. Confused. VWAP is here. That's the correct VWAP. All right, we're below VWAP. We got the mid. And so nothing here for me. I can read this, but it's not at a location. So nothing here. But the target would be that up here, the volume point of control. It's a mean reversion trade. And again, mean, stressing the mean. If it came out here, that would be okay. That might have been the full session V1. Is that making sense? Sorry about some of the confusion here. I've had a little technical problem here. My fault. How we doing there in YouTube world? Please give a like, helps the stream. Also, feel free to visit the Bookmap Discord Trader Lab community. There's no cost for that. There's a lot going on in there. Very active community. It's global, 24 hours a day. We have traders trading ETH. Depending on their location, there's a lot going on. So you guys following? Can you still hear me okay in Discord? Okay, I got something going on here. Okay. This is what the Bookmap Discord Trader Lab community is. This is our pinned library. Thank you, Ned, for curating the library. Everybody chips in, you might say, in the Trader Lab, and there's a lot of work to be done, a lot of research being done. This is the library of webinars. You should start with the primer. There's just some interesting things in here. Why most traders using indicators fail. Are you trapped in trader Groundhog Day? That's when you work hard and you wake up with the same outcome in spite of it all. how to trade high volatility reports, trading gaps, advanced user session psychology, and much more. And this is what the chat looks like. It's very active. There's a lot going on. Cognitive definitions, diffusion. I mean, gee whiz. After trading all day, I feel fairly diffused myself. And you're all welcome to this. So there's all the Daily Trading Coach. Yeah, Brett Steinbrenner, great book. So there's a lot going on in here. Charts, discussion, trades. How did it go? What did I do right? What did I do wrong? Would you have taken this trade? I did this. What do you think? All kinds of different stuff. So it's all here. It's all available at no cost. So feel free to come on by. There's a Trader Lab, and you can see it's a very active community. And if you're not in a community of serious traders, it's not romper room. It's really about the business. So if you're interested in the business, use the link in the bottom of YouTube. You might, pick up some things there in your journey. The thing about it is there's a lot of information out there, and I'm going to say a lot of it is not worth your time. It may take you it will waste a lot of your time because you take somebody's word for it, and they show you some select examples. The reality of trading is that you have to vet it. You have to find out for yourself if it aligns psychologically, even if it's even valid, and that's part of what you have to do when you come to Trader Lab. You've got to do the work. You have to become familiar with what's going on here. It's not your indicator doing the work and then you just look at something crossing over or touching an envelope or something. It's not that simple. You really need to be able to learn the language. So if we think of this as language, which is the way I experience it, and believe me, I never did before, until I'm trying to remember when it was, late 80s, 90s, where I started kind of changing because I learned market profile from Peter Stottlemyre. He created 1985, no, 80, maybe 87. I don't remember anymore, but it was licensed by CBOT. And when it first became available, I said, oh, this will be great. So yeah, I did really good with it. I used my indicators and the profile, and I actually wasted a fair amount of time doing that. So what I had to do is get rid of the indicators. And that was very hard because I basically grew up with indicators because they were new and novel when I was in the business early on. So, you spend years doing something. You're not in a hurry to let go of it because, the old saying, well, I got something out of it. Yeah, I got something out of it. Not so good. But the thing about everything we do, since we're in a random environment, random inputs work also, indicators work. This is I think the catch-22 for retail traders. Everything works. How about this? If you had nothing, even that would work. We didn't quite get outside, but there's no precision in this. So we're still looking potentially to come back here right now. So back to here, and then back to there, that low volume outside edge. So that's what this trade is. I did not have a location for it. So for me, I can't say I would or wouldn't be on this trade, but if you're in Trader Lab and you do not have a location, then you do not have a trade unless you can trade this. So you just wouldn't have a trade. It's like a bus. You wait for your next bus. You guys have questions? Yeah, December, you're welcome. You should definitely come over to Trader Lab. Use the link in the bottom of YouTube. There's no cost for that. And the idea of the Trader Lab is traders working together and also understanding what the truth of the market is. Now, how you slice and dice it doesn't matter. It only matters to you. It doesn't matter to me. The thing is, if you can learn to understand what is happening, by the way, this is the retail price. So this would, remember, if you got long, you're trying to come back here for the scale. And then up here or failure. One or the other. Don't know. Don't care. Now, we all root for the team, right? But who knows? How about this? Nobody knows. Can you put yourself in a mental place where you operate in an environment that's 100% random? And you can derive statistical probabilities. I've got a blank percent probability it's going to go from here, to there. Okay, but is it going to do it this time? How about it's 60% probability? Well, what happens to the other 40%? And has anybody ever heard of strings? Strings of winners, strings of losers? That's all part of the distribution. That's all part of the random distribution of outcomes. So all of this thing about predictability, just throw it out the window. All you have is probabilities, not predictability. And they're quite different. If the casinos could predict which hands they would have to pay to gamblers, I would suspect they might do something about that. But they can't. The only way they can get their dollars out is by interacting with the gamblers and being willing to pay to gamblers. The difference is that the edge goes to the house. So over time, if they play the game exactly the same way, that's all they have to do. Even though the outcome of any interaction is random, so they don't know what's going to happen when, they still play the game the same way because over time, that's the only way they get their edge extracted. That's why this is a target. And it's not there, it's one or two ticks ahead. Because this is called mean reversion. Mean. But there. So if you got long here and it didn't quite come out to the edge is right out here where that LVN is. This is the outside edge of this. If it's too low, I'm coming back possibly here and then here, another low volume node. It's just the way this works. And you may or may not, find that interesting. I hope you do. And I hope you come to Trader Lab because even though there's no precision in anything, if you understand the areas, you could be stalking the trade. That's what I do. I come, could be this one. It could be out here, and I don't know. So if I put a trade on here and it fails, I'll take a stop. I'm okay with that. I mean, I don't get euphoric over it, but I just say, okay, did I do what I was supposed to do? That's all I have to do. And if I take a stop, did I do what I was supposed to do? Then I'm okay. I go, all right. That's interesting. Mid, right? Sweep. This says up. There it is. I pull back. I can put my order there, and my stop would be under here. I get stopped out. Well, what am I going to do? Throw myself off a building? No. I'm just going to come out and go, here's another sweep. Here's my sweep. I'm looking for the reversal. Stop. Gee whiz, what's new? Sweep. Here's my reversal. Take it again. Enter here. Stop under here. Or don't take it. Where am I trying to go? Right there. And then it's here. Let's see what it does. Does that make sense? And I'm not saying that's a good, that's a trade anybody should take. What do I know? Please give a like in YouTube. Supports the channel. Subscribe. Don't forget, if you're new to Bookmap, there's a special onboarding session you can register for. It's available to everybody. Even if you don't have Bookmap, you can see how easy it is to get started. How to connect, what kind of data, the whole shot. You can access all of this through the Trader Lab or just go to bookmap.com. We got about 10 minutes left. Remember where we're trying to go with this trade. Now, let's go a little further with this. this is the outside. There's the trigger. This is the entry. There's the scale. Okay. Now, if we don't have this trade, what do? Well, what's this up here? If that's support, and now I have more high volume at this node, and I'm still trying to go there, what might I do here? Break high, support, entry, stop would be here or under this volume, which is right there. Because I left it. Now I got new volume here. So this is a more aggressive entry because of your risk is much greater. If it doesn't fit your parameters, you don't trade it. If you got in here, all good. And remember where we're going, right there. And now remember the next target, not a trade recommendation. If I can get above this volume, and you notice what's coming in over here, I'm looking for this. Let's see where this volume came from. This is a variable high volume node. That is resistance. So I have to be conscious, I believe it is. Yeah. It's right at this where it says HVN up there. I'm going to mark that. That's resistance. So depending on my inclination as a trader and my rules, I have to be conscious that this is resistance, that is resistance, and the stops are there, all out here. So if I can rotate up, I'd be looking for this. Now the trade could be over here, or I'm going for my statistics. Let's come back to stats. Over 90% probability I take out either the ETH high or low. And all things considered, I think I'm leaning this way. And then, of course, this. So these are our targets. Remember? Top of the stream. So if the intraday condition changes to mean reversion trading or outside in trading, I can still be working outside in towards these targets and then just managing the trade. So it's only longs unless you are a counter trend trader and you could be taking the shorts too. I always suggest just get on one side, and as long as you're in a directional market, stay with the primary direction. Don't join the side that's retreating. So why does the market rotate on itself? Because there's always stops at edges of swings. So for example, we have our short here. Well, there's going to be buy stops up here. If I get longs over here, there's going to be sell stops under here. If I get under there, there's going to be buy stops in this leg, which creates this. If I run into an outside edge somewhere that's too high, then I've got my longs over here and the sell stops are under here. So you always need to be looking left, and outside edges or low volume nodes tend to be outside edges of distributions. That's why this out here is an outside edge. So we're looking out here. Notice 759 sell stops came out. Ooh, a lot of tickets to the buffet were handed out on that one. So all those sellers came out. And if they come out and there's no selling below them, then we might want to get long for mean reversion back to there. Hope that's making some sense. And you might find this really confusing, which I understand. If you're not familiar with understanding how this works, then you might want to come to Trader Lab. Any question? We got about 5 minutes. I'm running out of time. If you have any final questions, please drop them in the chats. YouTube, if you're interested in this, if you're in YouTube, use the link down there to visit the Bookmap Discord Trader Lab community. You can become part of a serious community of like-minded traders. It's about the business of trading. There is no holy grail or secret sauce. It's you got to really determine if you have an edge and where it is, and then wait for the trades to come to you. That's really it. Um, Rome the boss, have these last two trades yesterday been harder to trade? No, same process. Um, Rome the boss, the thing about harder to trade, no, it's always the same. Sometimes the speed makes it a little hard because you got to just be more competent in the sense of executing on a timely basis. But in the Trader Lab, it's all structured trades. So the thing about having a structured trade plan is you know where the trade might show up. So you're anticipating it. You're not going, well, should I get short here? Should I get long here? You know, um, you might want to be getting long down here. And if you see the trade, it's just not your trade. That's all. But no, it's not hard. It's random. So I always find the hard part of trading is not the trading, it's the randomness. That is the part, the uncertainty that triggers fear, hesitancy, and the search for certainty and confirmation. That is the hard part of trading, the psychology. I think anybody can learn the trade if they do the work. I mean, if you come to Trader Lab, you will learn how to trade. But whether you do trade or can't, not you, but anybody can trade is a whole different question. It requires a real development of understanding that this is a statistically based business, not an indicator based business. And it doesn't matter how you get your statistics. Statistics are not a P&L event. Statistics are a specific trade event or structured trade or setup event and the conditions that are in alignment with it. Then your job as a trader is only to execute that trade when it shows up because it has a statistical edge. The outcome of doing that is reflected in the P&L. But the only way to get to a consistent process with a consistent edge is to know where your trades are, where they show up, what the conditions are, what the triggering mechanism is, the risk management, trade management, and targeting processes. Remember what we're trying to do here is we're trying to get there and ultimately out here, which not a recommendation, but that's the business. That's the trade. This is Trader Lab. Now, the fact it didn't come all the way out to a location, that's also trading. So you have choices to make. Subject to your plan, if you're disciplined, you wouldn't have a trade. You just wait for the next trade. If you have a way into this because you can read it and you're willing, this whatever risk of entry you have fits, then you are qualified to trade it. And then you're going here and we're going here. So I know that, but I can't predict what it'll do because it can do anything at any time. So, but my trade, my structured trade suggests here. LVN, here, and here. So this. And then perhaps that. And if you're in Trader Lab, you would already know this. So please give a like. I'm out of time. Subscribe to the stream if you want updates. But the best thing I think is come to the Bookmap Discord Trader Lab community. Take advantage of all the additional education. There is no cost. Stocks, options, crypto, order flow with a high tier tool like Bookmap. Structured trades that are available for you guys. There's 60 PDFs and that library of webinars and the Trader Lab community. Can't get better than that. And as my mother always said, no cost? Oh, let's get to. Anyway, come to Trader Lab. Like to meet you there. And Trader Lab, these streams, remember, are available exclusively to you to reverse engineer, screenshot, put into your playbook, and keep building out your plans. And always, always treat this like a business. Remember, to create a career in this business, we have to do what most other traders aren't willing to do. And that means roll our sleeves up and not emulate what other traders do who typically do not succeed. They don't have longevity. We all tend to do the same things. So if we're doing what other retail traders do, it might not be realistic to expect a different outcome. Of course, everybody's different and your mileage may vary. Take care, everybody. Thanks for visiting Trader Lab. Look forward to seeing you there. And remember to give a like on the way out if you're in YouTube. Helps the stream. Have a great day, everybody. I look forward to seeing you tomorrow. And don't forget our targets up above. And of course, that's not a recommendation. Take care.